Hello ladies and gentlemen, my name is Angad Singh and I'm a chartered accountant, and this video is about how huge financial benefit can be availed or is being availed by the goods transport agencies under the GST regime. To start with, I would like to mention that the goods transport service, the goods transport by road, this service was covered under reverse charge in service tax as well and initially in the GST as well. Now to understand what is reverse charge, first you need to understand what is forward charge. The GST collection mechanism is divided into two parts. One is forward charge and one is reverse charge. Primarily, GST is collected in forward charge mechanism. Now what is forward charge? Like, I am a chartered accountant. I raise an invoice to my client, let us say for 50,000 for some consultation service, and then I add the applicable service tax or GST rate. Like, service tax was 15%, GST is 18%, so I add 18% GST, that is 9,000 on it, and I raise an invoice of rupees 59,000. The client pays me 59,000. I keep my 50,000 with myself and deposit that 9,000 GST portion to the government. Now nothing goes out of my pocket. I just collect the GST from the client and pay it to the government. Now this is called forward charge mechanism. Reverse charge means where the liability to deposit that tax goes on the client, not on the service provider. Like, advocate is covered under reverse charge. So let's say I'm not a chartered accountant, I'm an advocate, I'm providing legal services, and I raise an invoice to my client for rupees 50,000. I do not need to add GST on it. I will simply raise an invoice of 50,000, receive 50,000, keep it with myself. The client will be liable to deposit that 9,000 rupees GST to the government directly whenever he pays to an advocate. Likewise, to a goods transport agency, he is supposed to deposit the GST rate, the GST on the applicable rate directly to the government. Now this is called reverse charge mechanism. Goods transport agency had this benefit that they do not need to charge GST and deposit GST, so they do not need to get registered under the GST law. Same was in the service tax as well. So they could avoid the hassle of getting a GST registration and then paying to some consultant for guiding them to how to go about under the GST, to pay to some support service provider to a chartered accountant who can take care of the compliances and then abide by the entire GST law or the service tax law. So goods transport agencies were exempt from that due to being covered under reverse charge mechanism. The GST applicable on their services was being directly deposited by the service recipient. Now, what happened that on 20th of August 2017, the government came up with two notifications, notification number 20 and notification number 22, which changed the scenario. Government allowed the goods transport agencies to bill under forward charge mechanism. That is, now the goods transport agency can add GST to their invoice, bill to their client, take the amount with GST and deposit the GST to the government. Now you would ask, why would somebody like to take that hassle? Why would somebody, waive that exemption that is being given? If it is an option, if the GTA has an option to either go for forward charge or reverse charge, why won't it like to continue in reverse charge itself? Let me tell you why. For that, you need to understand what do you mean by input tax credit. To explain that, I'll come back to the example. When I, as a chartered accountant, raised an invoice of 50,000 plus 9,000 GST to my client, I received 59,000, kept 50,000 with myself and deposited that extra 9,000 to the government. Now, before depositing that 9,000 to the government, I will deduct the input tax credit. Now, what is that input tax credit? Input tax credit means the GST that I have paid on the goods or services procured for running my business. For example, I'm running my office. I would have bought laptops, I would have bought furniture, I would have bought air conditioners, I would be availing telephone and mobile services, and a lot of additional goods and services that are the expenses and the capital goods that we procure to run the business. We obviously pay GST on them as well. Everybody is aware of that. But being a businessman, when I deposit my output GST, the 9,000 that I charged on my services, I will first deduct the GST that I've already paid on the goods and services I procured. So that means I collect the entire 9,000 but do not deposit the entire amount. Now for those who are not registered under GST like GTA or the advocates, their services are covered under reverse charge mechanism. So their GST is directly being deposited by the client only. So they do not need to deposit any GST. So when they are not depositing any GST, they are not entitled to any input tax credit. So that means the goods, services and capital goods that they procure for their business use, the GST paid on them forms part of the cost because they do not get any credit of it. Now this is a huge implication for GTA. For advocates, it's not a huge implication, but for GTA, it's a huge implication because a major part is the cost of the vehicles, the trucks that they use to provide the goods transport service. There is 28% GST on the trucks and the trolleys that are purchased by the GTA to provide the service. In addition to that, they pay for repair and maintenance, they pay for insurance of the trucks, they would be having an office as well, they would pay for furniture, for air conditioner, for they would be paying to some chartered accountants, to some other professionals, to some engineers, to anybody else. They would be doing lots of expenses to run that business. So the GST paid on all those goods, services and capital goods goes waste. It forms part of the cost. With opting the forward charge mechanism, the GTA will be raising the bill, collecting the output GST and would be liable to deposit that GST. So before depositing, it would be entitled to deduct all the GST paid on the inputs, the input goods, services and capital goods. Now this is a huge implication for big transporters. This amount can run into crores. That means you are collecting the entire GST from the client but not depositing the entire amount. You deduct the input tax credit, and especially on the vehicles, it's a huge amount. So this is a great financial implication that has accrued to the goods transport agency. So as a transporter, if you have not yet availed the forward charge mechanism, talk to your consultant, find the cost benefit analysis and see if that works for you, opt for it. And if any other query or information regarding this you need, please email me at angad@corentsing.in. I'll try to answer that in as short time as possible. Thank you very much.